Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex quick look. Take a look at the dollar versus Swiss. Today's date is January 25th, 2024. Dollar's a bit mixed today. For instance, against the dollar versus yen, the dollar is lower versus the dollar versus Swiss. The dollar is higher from yesterday's close. Now, we did have ups and downs in the Asian and early into the European session, but the New York session has been a rotation to the upside. And that rotation came after a couple things from a technical perspective. One is that in trading yesterday, the price fell below this trend line right here, connecting lows through here, but did find support buyers against what? That 200 bar moving average on the 4-hour chart. This is the overlay of that moving average right here. We're on the hourly chart right through here. But the overlay of the 4-hour chart, the market came down broke through the trend line, came down to the moving average and found support buyers. The rotation to the upside took the price back above this trend line. And as you can see, the low prices in trading here today after the Asian rise and fall in the early European session came right down to that trend line and found support buyers against that line. So that is a positive for the pair from a technical perspective. Since then, the price has also moved above the 200-hour moving average, and over the last few hours, we've been able to stay above that moving average level. What it hasn't been able to do is get above this blue line. This blue line is sloping to the downside, and that represents the 100-hour moving average. So if you were to characterize the technical bias for this currency pair, it's probably a little bit more to the upside above the trend line, above the 200-bar moving average on the 4-hour chart, this is the 100-bar moving average on the 4-hour chart. Here's a trend line. We're above the 200-hour moving average, but we are below the 100-hour moving average, and that is the next hurdle that would need to be broken to increase the bullish bias for the dollar versus Swiss. If we can get above that level, it opens the door for further upside momentum. The high price that we saw in trading earlier this week came in right around the 0.8728 level, and if we break above the 100 and get above the 38.2% retracement, by the way, that is of the move down. If I go to the 4-hour chart, it represents the move down from this high right here. This is the October high to the December low. So getting back above that 38.2% retracement is always something more positive, especially in a corrective move of a trend move to the downside. You'd like to see the price get and stay above the 38.2% retracement. It tried earlier this week, it tried last week, but could not do it. So getting back above that 38.2 at 0.8680 is required really to show that the buyers mean control. But for the time being, the trend line is holding. The price, the 200 bar moving average on the 4-hour chart held, and the price is moving above the hourly 200-hour moving average and now working on the 100-hour moving average at 0.8672. So there you have it, a look at the dollar versus Swiss from a technical perspective. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.